early light what so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight, and the ramparts we watched were so gallantly streaming, and the rocket's red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave?
Good morning. Good morning. Coming at you live on Rumble X and YouTube, we think, and maybe other locations here in the near future as well. This is World HD every weekday at 8 a.m. Eastern Time. Today's Tuesday, September 23rd, 2025. And good morning to our early risers out there and truth seekers who join us. Last night I was on with Aaron Day talking The Illusion of Free Speech. It was a 5-hour long stream. And so, I mean, man, the dude has endurance, that's for sure. And it was packed. I mean, he had 37 slides of information going through all kinds of stuff, you know, from the original, top three, mainstream media, CBS, ABC, NBC, going through that, going through, making connections to how that connected to, the CIA, MK Ultra, that kind of stuff, all the way through, into the new media, the mainstream, the streaming that we're in now, and how it's being manipulated, and how we have a lot of false, reads on what's going on with it, and it's hard to really figure out what's going on in that whole space. How are I think it's really apparent that something's going on and there's an agenda, right? I mean, I don't think that's any surprise to anyone. And then the question is I wanted to ask at the end of the whole thing was, what's next, right? What are we looking for next? I mean, obviously that's what we're doing is we're forecasting, right? And we're trying to get out front of things. So, if we're in the space where, this technocracy is, underway, and, we see deals like this, like just yesterday, NVIDIA and OpenAI did a $100 billion deal on data centers. That's a lot of money. Last week, it was a big deal when President Trump went to the UK and they did $10 billion, right? And we talked about that in terms of the energy. The UK can't really even handle the energy demands of it, big data centers right now, because they went down this, this rabbit hole of, the climate change, spending money on the wind, spending money on the solar, spending money on things, thinking that this whole ESG thing was going to go through. And, and there's so many things we could raise questions on that. Why did they do that? How did they go down that trap? Was it driven by King Charles? Was it driven by, the prime ministers of Boris Johnson and, now Keir Starmer and so forth? Was it driven by this whole bureaucracy, right? These bureaucrats? And we know that it was. We just, there's things we don't know, all right? And, all we can do is fill the gaps, right? And that's what we're here to do, is to try to fill those gaps. But the key is, what is next, right? And no one can really give a great answer on that. But that's kind of my goal. That's why I listen in on this whole thing. That's why I try to be a part of it. I mean, these guys are way smarter on that stuff than I am. Like Courtney Turner's really good on like the history of this stuff. I know just bits and pieces of that. I just piece it together. Aaron's really good on the crypto space, and he understands his privacy coin space. And, guy came on, I think his name was Rich, and he, toward the end, and he asked some questions about, this credit union that's starting to do stable coins in St. Cloud, Minnesota. It's a good question. What's going on? So, we kind of did some digging. It's nice when you have 3 or 4 people on there because while they're talking, you can actually listen and actually do a little bit of digging. 5 hours, you got tons and tons of time to do that kind of stuff. I mean, maybe Aaron didn't, but the key is what's coming next, right? What are they doing? Are they piloting some of this stuff? And I think the thing that I wanted to point out was currency is at the center of all this, right? So that's why we start the weeks off with Monday on Currency Day, and we want to watch these currencies. Why the dollar's so important. The other currencies are so important. That's why we talk about this, Bitcoin, which we're going to take a look at again today. I just think Bitcoin's been totally hijacked, and it's kind of become this whipping boy for things. Let me see here. We've got good. Hey Frank, good to see you in here. Rachel Hawk, good morning. Trumpet, good morning. Trumpet, good morning. Rachel Hawk, Frank, Crash and Splash. Rachel, kind of sick of these data centers. Yeah. No kidding. Rachel, I mean, it's surveillance of us for the most part, right? Yeah, I think it's that. And this is good. This will kind of fit in, right? With what we were just talking about is I think it's surveillance of us, but I think it's collecting all of our data and then putting it into these, AI large language models. And it's really this race to get the centers that can actually, create the the most powerful AGI, right? Or, the most, and how do you do that, right? You do that with the information from the people. So for example, right, here's a good example is I use a lot, I mean, I have a lot of computers in here, right? And a lot of servers and things like that. And then I have programmers that help me program stuff, for the markets and some for this show too, although we kind of, that there's a lot of stuff like close, that I want to introduce in the show, but it's just, you got to take that plunge, right? It's an extra time to finish it off to make it ready. But anyway, the point is, when I build all these things, in spreadsheets, I've got tons and tons of spreadsheets for this, that, whatever. And, and then for the show, we're using PowerPoint, stuff, which is Excel, which is a Microsoft product, which again, I wish there was an alternative that actually functioned well, right? And then there's, things like Word documents and other things. And we use other stuff to take things from the server and display it, creating our own ticker tapes, right? So we've got, ticker tapes on divergence. It's kind of trying to create this full circle. You get divergence, then you get the beginning of this trend continuation situation where, I was talking about this yesterday with one of my, and I don't want to get too far off on the path on this, but I might as well cover this while we're at it. So you really can think about things in markets 2 ways, right? Or two key things. You can talk about like change in direction, okay, or you can talk about continuation in a direction, right? And so, you're going down this road and those are the 2 paths. So change in direction is really things like divergence and what I call trend genesis. So, I break this down. At some point, I'll show you this trend genesis model of how it kind of works. We'll probably do that in the educational thing because I don't want to, we have to be a little bit careful with it. But the point is that's what we're always trying to look at, and then you get into momentum, right? As trend continuation goes for a while, right? As you get a trend and you're trying to, and you start counting how many times you get entries, right? So we talk about this low risk entries. So you get this, it starts to roll over. You can anticipate if this is going to work, here's what can happen, right? So then you can start setting things up so that it gives you alerts. You can say, okay, if in this particular situation, I want to go to this time frame with this kind of an entry and let me know when this or this or this happens, right? Now you can hands off, go work on something else, look at another market, set something else up, and then it lets you know. And it can even auto trade for you if you would like. It could put the trade on. So then, the thing advances, right? And then you get trend continuation goes in a direction. And then it turns into momentum, right? And that's where we're at in stocks, right? We'd have this, or gold, or silver, or, crude oil. Crude oil on the downside may not have a lot of momentum. There's probably a little bit of momentum there. But the key is you can measure this momentum, right? And once you get momentum, then the trend continuation really breaks down, right? Then once momentum starts to break down, you start to get divergence. And then you go round and round. So it's divergence, the trend, trying to establish a trend. The trend turns into momentum typically, then it goes back into divergence, right? And you just go round and round. Divergence on the buy, trend continuation, momentum, divergence. And so what do? I use that inside these harmonic structures, right? To say, okay, is it going to turn it to 5/8? Is it going to turn it to 7/8? Is it going to turn it to 2/8, 3/8? So the goal is to try to, figure out ways to bring this. It sounds easy. It's like, oh, well, it's here. I use it. How do we bring that to everyone else? And so I'm talking about things, and this gets into the Zano, right? And in time, I think this is the way to go, right? I think the Zano is the way to go for some sort of a privacy coin and privacy infrastructure, and then privacy. Again, if we're talking about all this stuff, right? The fact that they're getting into our world, they're taking our data. And that's what I was going to say is, when we build all this stuff, I used to store it on all my hard drives, right? Or on a NAS drive that's, it's connected to all this stuff, or off, kind of on another network that you can connect to, create a portal to connect to. But here's the thing, right? This is where I was really getting with all this is that it used to be, it was really easy to just store it on a hard drive, but now this system is like really making it hard. They want everything on the cloud, right? So you go to save something and they trick you. It's automatically, it says, oh, it's, go into your Open Drive, right? Which is a Microsoft product. And you're like, no, I don't want it going there. I just want it going on my hard drive. And you literally have to fight and put up resistance to save it on your own hard drive. And I thought maybe I'm just imagining this stuff, because technology changes and, you start to become an older and older dog and you're like, oh, this stuff is so frustrating. I don't really want to deal with this. Am I just losing my mind here or what? So then I started talking to my programmers and they're like, no, man, I'm seeing the exact same thing, right? So if it's happening to them, these guys are like bulls, they just plow through stuff. Like that stuff doesn't stop them. But when it's causing them resistance, then I know like this is for real. So that's the key, I think, is that, it's about obviously controlling the mind. But see, this is kind of a circular, think about this reference that they're creating, right? They want to mind control us, but then they want to take our information and our ideas to feed their AI model. So it's almost a circular reference that makes absolutely no sense. I mean, this is where it comes back to freedom of speech is so important, right? Freedom of speech is so important. Freedom of thought, right? Freedom of religion, freedom of all these things, right? Our God-given rights, you know what I mean? And our ability to be free thinkers and be excited about things, right? You come here with a gift and you're supposed to do something about it, and you're excited. Problem is they start taking that stuff away from you. They start taking away your freedom of speech, take away your freedom of religion, take away your freedom of thought. And that's what think about what this AI stuff is leading to, where these algorithms are running in the background. And, and I've mentioned this, I think, in the last week, we have intuition. You're driving your car and you're like, that's a funny sound. Then you're like, And the next day you're driving your car, that's a funny sound. And you have this intuition, something's going wrong. You're just trying to figure out what it is. You're like, something doesn't feel right when I'm turning. And your intuition's right. Or you drop something and you're like, it must be I think where it sounded, where it hit, I think it's over in here somewhere, right? And the same thing goes on in this whole electronic realm that we like we're in right now because we're watching this live stream, or we operate in with our phones or our iPads, or whatever we're doing. We live in this realm. We come in and come out of it all the time, and so that's why it's nice sometimes to just step away from that realm, because then if you step away from your phone and you step away from all this stuff, you can't be tracked, and it actually, you get to experience freedom a little bit, So anyway, I think that's what they're doing. But you can see the flaws in it, right? You can see the flaws in this thinking. They want to manipulate our minds, create the narrative, and then they want to steal all the information to feed the large language models that are going to ultimately come back and control us with this currency, stable coins, this Clarity Act, the Genius Act, all these things they want to put on us. So, I mean, their logic is out the window. And that's why we have to fight this with the technocracy, because even if their intentions were good, it's a flawed system in my mind. I don't think their intentions are good, right? As we see with, all these events that we go through, COVID, I don't think their intentions were good, right? There's going to be another one. You can tell they've got something cooking, right? They're going to get another false flag. And we're going to talk about that today with Russia, Poland, and Estonia, and Belarus, right? And all these things that are heating up, and yet we're diverted over here, right? And I get it, right? Charlie Kirk's a big deal. There's lots of controversy over it. Like I said, like I've been saying, I understand ballistics a fair amount, and I understand, mechanics of things. So I could probably try to sit in here and make some calls on, this, But yesterday, Tom Renz was on with Alex Jones, and I know Tom Renz, a little bit, and so I can text him anyway. And so so yesterday he was on with Alex Jones, and Alex Jones is trying to push this thing where this 30-6 round. I mean, this is a big round, a big bullet, that goes in and it bounced off his cervical vertebrae. So you have cervical vertebrae up around your neck, then you get thoracic through the main part of your body, then you get lumbar, right? And so to try to tell us that, this massive round of, traveling at, let's say, 2,500 to 3,200 feet per second, depending upon, the ballistics, and, depending upon how many grains of, explosives behind that bullet, to propel it. And then it hits his cervical vertebrae, which is mostly cartilage. That's the most flexible spot. Your neck, your neck bends pretty well. It's the most flexible spot of your vertebrae. And then it bounced off that. I mean, I guess anything's possible, but it's so illogical, right? I mean, the chances of that are almost zero, if there is even a chance. So the point is, anyway, I texted Tom Renz and I said, hey, Tom Renz called him out and he said, hey, look, I've shot 30-06s my whole life. I grew up with a gun and I can't imagine that this is the case. Bullets don't bounce off vertebrae. I mean, if anything, they just blow it right out the backside. They just grab a hold of that whole spine and just throw it out the back. And again, there's nothing on the backside of the back wall of the tent. So again, there's all these questions, who did it? Why did they do it? Who's covering this up? Clearly there's a narrative. And so where was I going with that? Oh, back to Poland, back to this whole thing. So yeah, we're diverted. And that was a very ugly scene, right? And it was a very terrible situation. But yet, if we don't fix, if we don't realize what's going on in Europe and we don't shine a light on it and the people don't say, hey, we're not doing this, then we could find ourselves with a false flag, event that goes on that, because if I'm not mistaken, Estonia just pulled Article 4, okay, at the United Nations Assembly yesterday. I thought that's what I heard. Article 4 is the precursor to Article 5. Article 5 basically initializes NATO to take further actions. So, I mean, we're like hanging by a thread here on this whole, Europe-Russia situation. And we're over here being diverted by Charlie Kirk. And again, great guy, everything I see, right? Gutsy, I'm not here to, I'm just saying that, like, one guy, right? We could see millions of people getting killed, over here because of this world war that's potentially forming. And there's things like that that just seem so disproportionate to me. It's like, yes, it's a big deal, but, and yes, our government, someone's lying to us more than likely here, right? Almost for sure. But we got this war going on over here and no one's covering it. So anyway, so again, this goes back to, last night, the illusion of freedom of speech, through all these independent media platforms and and then the stealing of our data, which I was talking about, pulling that data in so that they can feed their AI, that feed these data centers, right, to do what? To come back and use it to, do things that make them superior to us, right? They use our information and aggregate all that to make themselves superior to us in their mind anyway. And then, the whole time we're getting diverted and pulled into, big things, but still little, in context. And we miss out on the big things, right? We miss out on the big picture. And that's what we're, you do what you can, you know what I mean? Our audience was kind of taken away from us, and again, there's, but, I mean, look, I love it whether there's one person or 1 million people listening. But the point is, you trying to get the word out. And that's what, this 5-hour show was last night. And we're going to do a technocracy roundtable tomorrow night talking about sovereign wealth funds, which, for those of you who followed, know that I want to cover sovereign wealth funds in here for a long time, and I'm glad that this is going to do it because this will be really good, right? I mean, you're going to get you're going to get Patrick Wood, Courtney Turner, Aaron Day, really 3 smart minds, right? And then, I'll try to add in what I can in terms of sovereign wealth funds. I mean, it's kind of my area, but we're talking about it more from a technocracy standpoint, not from an investment standpoint. So that's the thing I have to be careful about is, I want to take it and talk about all the financial stuff, but I need to make sure that I, bring that in so it doesn't, stay on the course, right? Let them drive the technocracy component of sovereign wealth funds and what they're doing with it. And then I just bring the investment side of it. So anyway, so if you can check that out tomorrow night, that one will not be 5 hours. That one will be 1 to 2 hours at most. And it should be really good. It should be good content. And I'll put the link in here. I don't even know if I have it right now, but you can find it. You can either find it at CourtneyTurner.com, and it's COURTNENAY, or you can find it Technocracy News, Patrick Wood. Should be able to find it. If not, I'm going to put it in the link today and tomorrow, and that'll be tomorrow night. Okay, so that's a lot of upfront stuff. 20 minutes, man, it's crazy how that goes. Okay, so let's see here. What else do we have? Rachel Hawk, Tube is the worst. YouTube is the worst. Zero Woke Points was in there last night. Saw him in the chat on Rumble. If you're not paying for the product, then you are the product. That's right. I think that is so spot on. All right. TZ Burton, it's not adding up about Charlie. Yep, I agree with that. Rachel Hawk, remember the movies, The Creepy Line, and The Social Dilemma. I haven't seen either of those, but I should. Okay. All right. Well, let's get rolling here. Let's see. Bitcoin. We want to go back and look at that. Let's just do that right out of the gate. Let's go back and take a look at this because I had some charts yesterday, but I wasn't real happy with the way I got through that yesterday. Let me pull this up and there it is. Boy, always something there trying to trick you. Okay, and then let me gut this. Let me pull this off here. Clear and this. Okay, I think that should work. All right. Okay, so here's Bitcoin on a daily time frame. And so I was talking to a couple friends, because they spend their life dealing with the crypto space. And they've acquired some pretty good talent that helps guide them. A lot of these guys aren't super great analysts or super great technicians, but they have access to really good technicians, And so, I always like to talk to them whenever we go into the space because they spend their life, these guys spend 16 to 20 hours a day studying this stuff and trading it. And they've spent, they've been spent 10 years plus doing this stuff, maybe 15, some of them. So anyway, so the concept is there's a really smart guy who's got this algorithm, okay, supposedly. I've never, the little bit that I've seen, I haven't been super impressed with it, but they swear that he's accurate, and again, they track it, so I sort of trust them, on this front. So the concept here is Bitcoin, and I'm going to try to add my context to it in the sense that why would it pull back? Well, one, it's been hijacked, okay? It doesn't transact like they want as fast as they said it could, so that's a problem. It's expensive to transact. It doesn't really give you the privacy that they say that it does. It's been hijacked by the ETF space, and they put this thing called an ETF wrapper, right? So that way it's easy for everyone to get to it. They've turned it from a futures product, okay, because this is complicated. There's two sides of the regulatory industry. There's the Commodity Futures Trading Commission, and there's the SEC, Securities Exchange Commission, and you get other little things in there, FINRA, and all these self-governing things, right? A lot of it's just nonsense, but so it's a futures product, okay, but it's also a security, right? So they've securitized it and they put it in this ETF and then they put this, quote unquote wrapper on it. And you can read up on that. What's the ETF wrapper? BlackRock ETF wrapper. I mean, there's key buzzwords you can look, you can, chat GPT it or Google it or whatever. You can read up on that. But the key is this, that they call it now digital gold. Okay, so they've moved from this, this transactable currency to now it's completely morphed into this thing where they call it a digital gold. And, and then you can get into, like who's involved in it and, El Salvador. And I've been learning a lot on this too. But I don't want to go too deep into that. What I want to just say is that, I think there's better alternatives out there. And can this Bitcoin come down? That's the key. Why would it come down? Because it's not what they made it out to be. We don't even really know the origin of it. We get this guy Nakamoto or whatever who supposedly created it, but it really looks like it goes back to a 1995 white paper. So that's kind of the backdrop on this. I've always been suspicious of it in a lot of ways, even though, again, you can still trade it, you can still hold it, but you got to understand, if it starts to crack. And here's the other thing. Why would this crack? Well, a lot of people have been pushing this in a whole different direction too, saying that, that corporations should hold Bitcoin in their treasury, okay, and that they should actually benchmark their cost of capital against the performance of Bitcoin, okay. Man, that for something that's this volatile, like that's what I want to show here real quickly is, look at this market, right? You're talking about, back in, even since 2018, right? The futures market started here in late 2017. You get this move down into here, right, which is like under 4,000, okay, and it's just 6 years ago, right? And then you get this run up to 60,000, 70,000, mid 60s. Didn't hit 70 quite, I don't think, there on this run up. And then it comes all the way back down to 20,000. Okay. Then it goes all the way up to, now it's at, 125,000. Now it's potentially going to pull back. And you could see where this thing could pull back, right? It could pull back into this orange zone. There's different, it wouldn't be that crazy to see this thing pull back to 100,000, 90,000, something like that. It just, but so that's what these guys are calling for too. To me, it looks like it could pull back. And then if it did, where and how long would it take, right? I think someone was asking that question. Maybe Geo Rich yesterday was asking that question. So here's, if it follows perfect symmetry, okay, and you get these things called heads and shoulder patterns, right? Pretty typical, pretty standard, pretty basic technical formation that, it's one of the first things you'll learn if you're doing technical analysis is a head and shoulders formation. And they actually kind of work, right? Because it mimics a W formation, which is a good formation. It mimics a lot of different things. So there's the head and shoulders, and then there's like versions of it that you could call it different things. Okay, anyway, this is what you're looking at potentially, right? And I'm going to switch this over to. Let me just put this up here. So we'll call this the head. All right, and let me just make it bright like that. Okay, that should work. So there's the head, and this is the shoulder, okay? And then the question is, would there be another shoulder? So if we drew that with some form of symmetry, you're looking at something like this over in here, in terms of symmetry, meaning, distance from the head. So, you go from this shoulder to that head down to this shoulder. So you want something that's a little bit symmetric like that. It doesn't have to be perfect. One can be narrower than the other. And then, similar height in the shoulder, all right? So again, shoulder, head, shoulder. And if that's the case, then you're looking at the neckline, right? And so you could say, okay, where's the neckline? Well, right now we don't know for sure because we only have one, so we could say, oh, it's this right in here. It could be, this neckline. It could be this neckline, right? So the biggest thing, let's just call it right here, the bottom of this for right now. Okay, so this would be kind of a drop dead spot that we could see that this would provide a lot of support for Bitcoin if it got down to this purple line, right? Let me change the color of this to maybe like a bright yellow or something. Okay, so let's just call that, right? You got the shoulder, you got the head, you got the shoulder, and you got some kind of a neckline coming in here, right? It could be like this, right? It could have a little bit of a slant to it. Okay, it could have a lot of different things with this. Anyway, doesn't really matter. What matters is there going to be some kind of a self-fulfilling prophecy or some sort of a technical pattern that builds here? And why would this happen? Okay, so will it go in? Will it trade down into this area? Let me switch over to this. Could it trade down into here? Okay, somewhere in this area, right? Something like that. And then bounce back up into here, okay? And then maybe come in and then you're going to start getting into these trend lines, right? And I've got these trend lines fanning out, right? So we got this red moving average that's kind of coming up. And then I fan it out with these purple trend lines. Okay, so again, these are paths that it could potentially take, right? If it goes higher, it's going to pull that moving average up. Okay, if it goes down, it's probably going to continue to stay on that, that middle pathway, that middle purple line. And if it starts to come down, it's going to start to move the math on that moving average down, it'll follow that. So it kind of gives us at least a range for the moving average, where it can possibly go. And that's why I like to fan these things out. And at some point, we'll get into why later on, because this kind of ties in with some other things, price and time projections and so forth. But the key is this. Let me just mark this. Can this thing move down into this area? Okay. Build a little bit of sideways pattern, bounce back up, and then maybe follow some kind of a pathway down into here. And if it does that, those little yellow bubbles, right? Can it follow this pathway, come back up, and then go there? And if it does, what happens? Does it then start to break, this big level back in here? Okay, does it start to break that? And that's the key. That would mean some kind of a failure in Bitcoin. Okay, a big time failure if we started breaking the moving averages and breaking the neckline. Now, what could cause this? Okay, well, again, these companies like Michael Saylor, okay, and Jack Mallers and Galaxy Holdings, and there's a handful of them. Even Trump Media has holding a lot of Bitcoin, or starting to hold a lot more Bitcoin. But the key is when you start leveraging this, like Michael Saylor has, and we've covered that in here multiple times, then these guys, and he's been buying as it goes higher and higher and higher. He keeps buying, which means all that does every time you buy at a high, if this is your average, let me see okay, here. So if this is your average if this is your average, right here, okay, and you come in and you buy, it's going to pull that average up for your average weighting for everything you hold. And then if you buy more up here, it's going to pull that average up. So every time you keep buying on highs, you keep dragging that average price up, which adds to your risk, okay? Because, where are you wrong? Well, Michael Saylor was probably sitting in the 70s, $70,000 range, right, for his average price. But he's been buying up at these highs at 120. Because again, he's got he's pumping this thing, right? And we don't really know what they're doing, but we think, you can see his accumulation and holdings of this stuff somehow. The key is if someone like him who holds a lot of Bitcoin, okay, the market starts to get wind that they can actually get to his point where he's in trouble and he's got to sell it because he's sort of backed himself in a corner. He's got a company that's holding Bitcoin. He's got to answer to, shareholders, the market, everything else. If this company starts to get hit with Bitcoin, all of a sudden he might have to dump all of his Bitcoin, right? And it just floods out onto the market. What does that do? It creates tons and tons of supply. And then at that point, there's not a lot of confidence. So what does that do? There's not a lot of demand either. So there's tons and tons of supply on the market because you just hit Michael Saylor's stops and he just had to basically barf up all this Bitcoin. And then there's fear in the market or, lack of confidence. And all of a sudden, everybody backs away. So now even the holders are saying, whoa, I'm getting out of this thing. So it can create this rolling over effect. And that's what these guys are essentially kind of saying. We could also make the case that, Bitcoin's just going to go sideways here for a while. It's going to build energy. You can almost see an energy formation building here. Okay, the red goes inside the white. Let me just, turn that to blue because that's normally what we do. So it shows up. So let's say we get that. The thing goes sideways. There's clearly momentum here. Okay. And the market resolves and it goes up to 150 or 200, right? That's what Michael Saylor is going to tell you. It's going to 150, 200, and then to 1 million, right? Other people are saying, yeah, I'm a little bit concerned about it. I'm going to dump some of it. And this is why it's hard to hold a market like this, for 1 million. Like even if it goes to 1 million, it's hard to hang on to it, because, how much do you hold on to? You should take some profits. And that's the key. You're like at 120, 125, if people are taking some profits, great. You want to add some back. Maybe add some back at 105, 110, 112 yesterday, right? And see if it works. You get a little bit of a bounce. So that's why I like to trade around the idea. Okay, so hopefully that makes sense. I want to see if there's anybody in here who has any questions on this. Let's see. Remember, okay, both those movies are good. Okay, good. If we knew, Facebook and 10-year, Rachel, Chance, Trumpet, almost happened to me when Facebook slapped disclaimers. Okay, so is it 100K? I think that's referring to Bitcoin. So the key is, here are the levels, right? So this level right here is, let me just mark this so we can see it a little bit better. So this area is sitting right around 100,000. Oops, it blew that. There we go. Okay. So this area right in here is like at 100,000. All right. And then this area is 90,000, which again, a lot of people are saying this would be some kind of a test point for it, around 90,000. And then this would be sort of that, the spot where the neckline gets broken and the real fear settles in. This is the spot where Michael Saylor would get hit, forcing him to be a seller of huge amounts of Bitcoin, creating potential fear in the market. And that would be, in this area, somewhere between 75 and 80,000. So we have those three barriers of, for Bitcoin. And really, this is our time frame over here that we're looking at. Let me just put this back to a circle. This is the thing that we're looking at is, can this thing come down and create some sort of symmetry and create another shoulder, right? That would be the first step. Does Bitcoin come down to around 100 to 105,000? It could go down to 90, somewhere between 90 and 105, right? Would basically mimic the left shoulder. The right shoulder would be somewhere between 95 and 105. And again, it doesn't have to be perfect, right? It's a general pattern, So again, that's what we'll keep in mind. So that's the concept, right? If we think it's going down, and a lot of people do, a lot of these guys that watch this stuff. And so the concept is, this supposed genius out of Australia, his name's Marius, he has an algorithm and he thinks that the Bitcoin's going to go down and all the smaller coins, the altcoins, are going to go up 5,000% or something like that. So what would that mean? That means privacy potentially. This goes back to what we were talking about, the freedom of speech, the privacy, all these different things. Is there a privacy issue, and do these altcoins potentially offer that? So there could be an opportunity here for people who've traded Bitcoin to look at other altcoins. And that's why I've kind of, hooked on to Aaron Day, because this is something that I'm not an expert in, but I'd like to become, much better in it, because I think privacy can become an issue over the coming years, right? Even maybe over the coming months, right? Privacy could become an issue because of the things we're seeing. The NVIDIA OpenAI deal of $100 billion, the data centers, right? These guys aren't stopping. They're continuing to forge ahead. And what does that mean for us? Again, all it takes is one false flag, and now they shut the world down. They shut down the banking system like they can do during wars, okay? And all of a sudden now they've got, they've seized things, they've tokenized things, right? How are they going to tokenize all these assets? And we'll talk about that. I don't want to get too far down that path, but tokenization is a way to essentially, steal something, give it some kind of an ID number, right? And now it's now on the blockchain, right? It's now a tokenized asset, and it can now be traded. And the question is, who provides the laws behind all this stuff? There's a million questions with all this stuff. And this is, so anyway, so hopefully that does a better job with Bitcoin. We walked through this potential head and shoulders, pretty easy thing to understand. Trying to give you the background for it is, if it really started to slide to the downside, what would it be? It'd probably be fear out of these guys who are promoting Bitcoin as a treasury holding, okay? And that benchmarking, so benchmarking means that, they look at the track record of Bitcoin, they look at the track record of, short-term treasuries, and they say, well, Bitcoin's performed better, so we should benchmark to Bitcoin. Therefore, you have to hold Bitcoin, So again, this whole thing's a racket in a lot of ways, right? It's the Dutch tulip mania to some extent, And if Bitcoin was building momentum in terms of its transactability, that'd be a different story. If the fees were coming down to transact in Bitcoin, that would be a different story. Right? If it had privacy and the privacy part of it was getting better, that would be another story, right? If it wasn't being securitized and promoted and amplified by people like Michael Saylor, that would be a different story, right? But there's a lot of these things that I think are going against it. However, that being said, the key is, does it build energy? Does it go sideways for a while? If this thing goes sideways for a while up in here and doesn't break this area, okay, so let me throw another line up here. This would be a spot to watch. Let me see what I've got. Let me just draw this across here. So we have these prior highs back in here. I'm going to put this thing across the whole screen. So if it can hold this level, like that long, skinny, pink, line that I've got going across the screen, then really that's these prior highs back in here. There's some volume that went through here on it, okay? If it can hold this, essentially, I think Trump has said it, like 105, well, it's a little higher than that, 105 to maybe 109. Somewhere, if it can hold that 105 to 109 range, and it can just go sideways, and energy can build, and the momentum stays intact, which it would, then, this thing can resolve on the upside, and it's up and away to new highs. Okay, so those are the two scenarios, right? The key is, if you have conviction on the long side, wait for a pullback. If you don't, and wait for a little bit of a rally to either sell it, get out of some, liquidate some, or potentially take a short position. So hopefully that makes sense. We looked at both sides of it. If you think it's going higher, what's the situation? If we think it's going lower, how are we going to handle it? Okay, and what are our targets out in time? And you can look at time-wise. I think someone was asking time-wise. I would look at this purple box over in here and this one, and I would say, our time window is October through, and this is what they were saying too, mid to late October is when you would see something like this happen. Okay, that was the other part, is a time frame. Again, from the gurus, not from me. But if I'm doing it, I'm going to say, late October into, let's say, mid next year, mid to late 2026 is our time window. So essentially a 1-year window starting from, another couple weeks out another whole year, right? To build that other shoulder, potentially. Okay. Yeah, I think that would be, yeah, I think that's reasonable. Okay. All right. So let's keep rolling here. We got some stories to get through, and some economic data. Let me go hit this. Okay. Let's go through this stuff. Let's get to this economic data, because we do have some stuff going on. It's worth taking a look at here. Okay, so this was the week. Yesterday, huge amount of Fed speakers. We'll look at a chart. We'll look at a breakdown of that here in a second. Today, we had this big swath of manufacturing PMI data, right? Purchasing Managers Index. We're going to look at that, right? A lot of stuff focused around, I'm trying to keep this focused around the manufacturing side of things, right? Because that's where we're getting a lot of, I think, clean data, right? Cleaner data, right? Then that's today, okay? We've got some of that data out. Then Wednesday, new home sales, another home data point. Wednesday's kind of a light day. Crude oil inventories. Last month, we saw the big drawdown, minus 9.3 million barrels. Should have been bullish for crude oil, but it really had no impact on the upside. Okay, so again, if that's the case and the price is right and the market is correct, the crude oil market's correct, then what we should see is this number correct. We should probably see, minus 1 million barrels or plus 3 million barrels of surplus, right? Building in this next read, okay, tomorrow. Right, that back and forth, back and forth, back and forth. If the price in the crude oil, and we'll look at that tomorrow. Tomorrow's energy day, right? So we'll take a peek at that. Then Thursday, we get the Swiss National Bank, okay? Watching tomorrow, the UBS economic expectations out of Switzerland. Again, CHF means Switzerland, that three-letter symbol. So tomorrow we'll get the economic expectations out of the UBS analysis department, right? Their report. And then Thursday, we actually get the Swiss National Bank policy rate announcement. And then in the U.S., we're going to get final GDP quarter over quarter. Again, that's coming in pretty good, 3.3%. And yet we're cutting rates. And we're going to get to that here in a second with Stephen Moran. Okay, then we get durable goods. That kind of ties in a little bit with the manufacturing, right? Longer term, more duration of goods instead of services, which are kind of quicker reads. And then we get Friday, we get PCE, personal consumption expenditures. This is what the Federal Reserve, they love this number for their inflation read, okay? And then we get this garbage University of Michigan sentiment that does tend to move the markets, right? I think it's a narrative controlled device myself. Okay, then we get, so let's reflect on yesterday. We had tons of central bank speakers out of the Monetary Policy Committee in Great Britain, this guy named Member Pill. Then we get I think we had 5 speakers yesterday in the U.S. on the FOMC. Williams, Moussalem, Moran. We're going to talk about Moran here in a second. Barkin and Hammock. That covers the majority of them, all right? And that covers it. We'll get to Moran in a second. And then Europe, we had this Nagel speaking. This guy's always out speaking. This guy's, I don't know, it's interesting to watch where his career leads because this guy's always on the news wires, Nagel. Right? And then we get this 2 o'clock today, we get the governor of the Bank of England, Bailey, speaking. We've covered some clips on him. Kind of a clown. But anyway, I'll leave it at that. All right. Then we get, let's see, today's data. We get pretty good swath of data. Here's the thing, right, is we get French flash manufacturing PMI, German flash manufacturing, European Union flash. Again, it's the whole EU as a composite, right? EU flash manufacturing PMI, UK flash manufacturing PMI. You can see the expectations, and then you can see every one of the actual reads came in negative, below expectations. Not good. Then we got at 5 o'clock this morning, we got the UK 30-year bond auction was expected at 5.17%, 5.37, I think it was. I think that might be wrong. I don't know if it's 5.17. No, it was. Yeah, so that's right. 5.17% expected yield with a bid to cover of 3.2. The yield actually went up to 5.48, so that's a higher yield and a lower bid to cover, meaning less people showed up to buy it and the yield went up. So that's a double whammy, right? They're basically having to get higher yields to get people to show up to buy it, right? Or buy the amount of debt that's being auctioned off. So not a good number. So again, nothing good out of Europe today, okay? And then we get today at 9:45, we get our U.S. manufacturing PMI, expected at 52.2. I would expect to see that one turn out green, right? If I had to be a guesser here, I would say we're going to see, 52.4, 52.7, something like that, if I was guessing, right? But I think tomorrow we'll see that number's green. If not, the key is you want to see it stay above 50, right? It's a diffusion index, so 50 means expansion. Anything below 50 is not so much expansionary, right? It's contractionary. So the key is I'd be shocking if it dropped below 50, but I wouldn't be surprised to see that one come in green. And then we get 10 o'clock today, we get Richmond Manufacturing Index. So again, we're watching all these manufacturing index. We watched the Empire State last week, the Philly Fed, and the Richmond Manufacturing Index this week, and actually today. All right. And then Okay, so let's get through some of these headlines. So we've got FOMC Moran, aggressive cuts. Okay, so we got these two. I'll just lump these two together. So we've got the Stephen Moran makes a case for aggressively lowering interest rates. And I want to show this. Let me just look at this now. Let's take a peek at this. I've already got it up there. Okay. So here's what we get in 1999. This is a similar case to potentially what we're doing, right? It's tech driven, right? 1998, we're going into this, the summer so we got a couple things on this chart. Let's just go through the chart. So back in 1996, late 1996, Alan Greenspan, who was the head of Federal Reserve then, came out and warned, he introduced this term called irrational exuberance, okay? I think he just made it up, and I'm not sure that I think he coined it. Then in 1998, we get, in the summer, we get global financial turmoil erupted, again, because of Russia's debt default and the subsequent collapse of long-term capital management. So we get this Asian currency crisis, okay? We've got long-term capital management, okay, which was this hedge fund of these geniuses, right? And so they were, basically betting big amounts of money on this small, like, very leveraged, right? I'll just leave it at that. A very leveraged fund. And when it blows up, they had big ripple effects throughout the system. Okay. So they were allowed to get bigger than what they should have been, right? There weren't really good controls over long-term capital management because these guys were so smart, right? Why you have to monitor guys that are the smartest guys in the room. Okay. Supposedly. Anyway, the system, you get this combination of Russia, the debt default, the end of Yeltsin, right? The beginning of Vladimir Putin, right? We're coming right into that transition point. Russia's very weak. The U.S. helped out Russia a lot through that whole crisis, trying to, use currency flows to help Russia because, again, you're on the back of President Reagan and Yeltsin and Gorbachev, right? And then Yeltsin. So you're in this whole reform period, right? So the U.S. helped stabilize Russia during that period of time. Otherwise, there could have been big implications. Okay. The key here, though, is the Fed comes in and they start cutting rates. Okay. So between September and November of 1998, the Fed lowers rates from 5.5% to 4.75. So basically 3 25 basis point rate cuts. Okay, similar time frame to what we're in, right? October, November, we just had a rate cut. We're looking at another rate cut in October, probably another rate cut in December. Like it's a 90% chance, let's just say, of a rate cut in October. And I don't know what it is in December, but it's fairly high. So we're in almost the same kind of a situation. And we get this big dot-com bubble melt up in 1999. Right. And you can see what the Fed does on the bottom, right? The Fed is, in that bottom pane, you can see the Fed starts having to raise rates, right, to curb this thing. So here we have Stephen Moran coming out and saying, we need to cut. He's calling for, aggressive cuts, stock markets at all-time highs, aggressive cuts. So we have a chance of overcooking this market. Okay. And so a couple things I want to talk about on this is the Fed's dual mandate, right? Maximum employment, price stability. They haven't hit their price stability target of 2% in a long time. Okay. So, and they may not, right? Because if we're going to continue to stimulate this market, we're going to get some form of inflation, right? We talk about these different forms of inflation: asset inflation, currency inflation, demand inflation. This would go toward asset inflation. So if we get a big run up in the stocks like this, you can see what can tend to happen on the other side, right? You get this big bubbling up effect, you overcook the market, right? And you get runaway inflation, which does what? It starts to cook the consumer, right? The consumer can't, the few who own stocks are going to benefit, but then the prices are going to kind of get pulled up with this, right? So the cost of, things are going to run up. Now, if you can bring the cost of oil down, it starts to offset some of that stuff. Anyway, the point is this: the Fed has not hit their 2% target in a long time, right? In 2012, right, they didn't really talk about a 2% target, right? They just said low and stable inflation. Then sometime between then and 2020, they started throwing out the term, we do have a 2% target, okay? And then why 2%? Okay, well, it's considered low enough to preserve purchasing power over time, okay, for the consumer. It's high enough to avoid deflation, which they believe can be economically harmful, but to whom, okay? And we'll talk about that here in a second. And then also, it provides a small buffer above 0%, right? So it gives the Fed a little wiggle room to cut interest rates in a downturn, right? So in 2020, the Fed updated their strategy to a flexible average inflation targeting. It got never really took off, but it was FAIT, right? Flexible average inflation targeting. This approach allowed them to run inflation moderately above 2% for some period of time, right? To make up for periods when it was supposedly below 2%. So let's take a look at this and we can see, let me just show this one, right? So here's the inflation rate. Again, you can see from 2009 to 2020, okay, this green line, inflation rates at an annualized 1.8%, okay? So below that 2% target. But then you get to 2020 and what they do, they changed it, okay, because they knew it was going to get out of control. I think they knew what was going on behind the scenes with Biden, right? Because they clearly drove inflation, right? They wanted to stress the system, I think. So you get this 8.6% annualized rate, right? The red, it just accelerates. And remember, these numbers compound on top of each other. So it gets out of control pretty quickly, all right? So here's the other thing. Let's take a look at this. What's the problem with deflation? Here's what they're going to tell you, right? Deflation is a sustained decline in the general price level of goods and services. It might sound good for consumers at first, cheaper prices, but it's generally considered harmful to economy, and here's why, okay? Delayed spending and investment. So when people expect prices to keep falling, they delay their purchases, right? So again, if something's $1,000 today and you think it's going to be $900 next month, why would you buy it? You're going to put it off, right? Okay, so that's one thing. Then lower wages and job losses. As companies earn less due to falling prices, they often respond by cutting wages or laying off workers, right? This leads to lower household income, further depressing demand, right? Then we get into this, okay? Then we keep going. We've got increased real debt burden. So deflation increases the real value of debt, all right? What you owe is worth more in today's dollars. So this is a lot of what so this is a good example. If you owe $10,000, the price falls 5%, that $10,000 becomes harder to repay because your income and prices are falling, but the debt stays the same, right? Now, this is why they want inflation, because they can continue to run up debt, all right, and just inflate it away, right? So as inflation goes, that debt becomes a smaller, part of the pie, okay? And then another reason that they throw out here that deflation is bad is that monetary policy becomes less effective. Okay, so the central banks lower interest rates to stimulate the economy, but we're stimulating economy now at all-time record highs in the stock market, okay? But in deflationary periods, rates might hit zero or even go negative, leaving little room to maneuver, okay? So this is where we found ourselves after the 2008 real estate crisis, all right? So I think that, and here's one more quick thing, right? The deflationary spiral risk. So it's this, they believe that there's this self-reinforcing cycle where you get falling prices, lower profits. That means corporations make less money. That means they have to cut jobs, right? That means people can then spend less, right? Because they're worried about their jobs. And then that creates further price drops, right? So again, and it goes round and round and round. So they'll tell us, okay? Question is, have we been lied to this whole time, right? Have we been manipulated behind the scenes, right? Are we calling this out with the Federal Reserve now? Can we cut rates and not go into, a bubble, right? How can we sustain this? A lot of this could come down to, if this AI can be used for good, right? Then maybe we can, again, you always want to say it's different this time, right? It's different this time. It's usually not different this time. But could it be different this time by having, again, the U.S. is the most productive large nation in the world by far. If we can become even that much more productive because of, these innovations in AI and, automation and, all the things that AI could bring, or we go into this technocracy, right? This is that double-edged sword we're at right now, So the question is, have we been lied to? And the Federal Reserve really hasn't been working on our behalf for a long, long time. And how do they do this? Because they're part of the narrative, right? They've got all these economists, right? The Bureau of Labor Statistics, right? We've seen these labor statistics being manipulated, right? And so they put in somebody new to handle the Bureau of Labor Statistics, because the numbers have been wrong, right? Under Biden, they pumped them up, and then it was just a big farce. And then they want to blame it all on Trump, right? So the key is, have we been lied to? Is there a way to do this without a Federal Reserve and, get it to a rate? And maybe that's what Stephen Moran and President Trump and Bessent are trying to do, is get it to a long-term, because Stephen Moran last week said, basically, let's add a third mandate to this. We've got maximum employment, price stability, right? And then the third thing would be long-term stability to the debt markets. Now, that also means controls, like who's going to control that? The Treasury? You can't control interest rates, because in the end, the market's going to control that, all right? because we have to go through cycles. I mean, that's what the Fed's stopping is the cycles. So hopefully this isn't too much. There's a lot. We just dove into a lot right there. Okay. Natural cycles, manipulated cycles. Is the Fed manipulating the cycle? Is it okay for us to go through natural cycles? Can we handle natural cycles with all this debt? See, these are the big questions right now. Again, on debt day, this is kind of where I wanted to get to. If we go through natural cycles, can we even handle it at this point? Or do we need a state-controlled system where we're just going to lock rates in at 3% for a long period of time and try to ride with it? Can the markets accept that? Will they accept that? If we go into war, I don't think so, right? So again, there's so many tangents on the outside of this, but the key is the Fed has not been able to hold the 2% mandate. Moran doesn't seem to care, okay? He wants to basically cut rates more and stimulate this economy to get it to grow. And I think I'll leave it at that, right? Because, the goal was in this administration was, with Elon Musk in the picture, they were going to innovate and create all this Doge spending cuts. And then we were going to grow. And we were going to squeeze this issue we have, this massive debt, from both sides, right? Cut costs and grow. And that we're going to accelerate our way out of this $37.5 trillion worth of debt. And get some sort of an anticipated target date where we could get this thing under control. The problem is Doge was a bust, okay, and that looks like a technocracy fraud, okay, at this point, where the information that was taken out of Doge was potentially handed off to Palantir, okay, not good, all right, and then the question is now we have Stephen Moran trying to pump the gas on this thing, and are we going to end up with some kind of a situation like this? So these are the questions we're asking ourselves right now, okay, so again, let me go to this again so you can see this chart. There we go. So again, cutting rates, 75 basis points. Do we get a bubble up effect? And then what's on the backside of this, right? Those are the big questions. And so, I mean, if you follow that, I don't think you're behind anybody on Wall Street or any of the economists. I mean, you can look at this in all these different angles, but essentially from a debt perspective. And again, that's why I wanted to bring it back to debt because, again, that's what the Federal Reserve does, right? They essentially absorb debt that nobody else wants when nobody else wants it. And then they put debt back out on the market. They basically liquidate things that they buy during periods of good times, okay? And cutting rates forces things to change, right? Accumulation of more debt, reduction of debt, and so forth. So again, hopefully that makes sense. Hopefully, I didn't go way off the deep end there, but hopefully it connects up, okay, with Stephen Moran. So the real-time events and what's going on in the real world, the real time. Now, they'll also tell you that deflation, that's what led to the 1930s depression, right, where prices fell sharply, unemployment soared, the economy contracted severely. They'll also go back to look at Japan from 1990 to 2010, and they'll say Japan struggled with persistent deflation and stagnation, and they refer to it as the lost decades in Japan, all right? Lots and lots of stuff there, all right? But the key is if we, that covers a lot of ground. I mean, I think if you get that, you're up to date with where the Fed's at, where Stephen Moran's at, where the Trump administration's at, and essentially where the world is at in terms of a debt perspective, because the U.S. drives a lot of this stuff. All right, let's take a look at a couple more charts here. I want to go in and look at wanted to look at this. We haven't looked at this in a while, and I haven't even looked at it this morning, so it's kind of blind to me. But let's take a look at this on the Japanese yen, because this is going to mimic the debt market quite a bit, or it has. It's sort of breaking away from that. But here's a weekly chart on the Japanese yen. You can see the Japanese yen is could potentially be basing down in here, right? If this thing starts to rally a little bit, there's a decent chance. So if we see some kind of upward movement, right, this could be an underlying catalyst, okay, for the treasury market, right, to rally a little bit, right? We've got this upward sloping trend channel. It's really been a mess. I think we lit this up yesterday all the way through here. This has been a very messy situation all the way through here. Again, it hasn't broken the trend channel, but you can see it's much different than what it looked like in the past, right? Comes down, bounces off of this, goes up to the upper end of that upward sloping trend channel, bounces off of that, comes down, taps it twice, bounces, comes up here, taps it twice, sells off, bounces to the downside, comes down here, bounces, breaks below for a little while. We were talking about this, all the way beginning of this year, and then now it's back up inside this trend channel, but it's not making much progress. And so, we were thinking if the Fed was going to cut rates, if they did 50 basis points, maybe this market spikes through that green line. Instead, it kind of went up. Now it's selling off. So it just continues to test this upward sloping trend channel. If we look at this on a longer term basis, what I think we have here is, this back in here is 1990s, early 1990s. So we had this big move up in the treasuries, right, over a 20-year period of time, 30-year period of time, 30 years, right? This upward sloping trend channel, this big one, was a 30-year deal. Then it sells off big. And now what I think in that green box, we're basically in a consolidative period. So if we found ourselves up in this circle, so up in there, at that point, I would say there's a good chance that we're going to go to higher yields, right? You need a position. So right now, I think we position for lower yields, right? Because that's what the administration wants, right? The Federal Reserve is going to be basically coerced and adjusted, right, with new personnel and so forth to get lower rates. So I think ultimately they're going to drive for lower rates, which is going to potentially overcook the stock market. Maybe we'll see. Doesn't always lead to that. It's not a guarantee, but that's what seems to be going on so far. We'll see over the next couple weeks. I think the next couple weeks will be telling. But the key is, over the long run, over the next, 3 to 4 to 5 years, we can probably expect to see this bond market roll over, create higher interest rates. This is what leads us into some sovereign debt crisis in Japan or Europe or somewhere around the world. All right. So there's the debt markets for the day. Let's take a look at stocks. We've got this, the S&P. Let me see if I can find the chart we've been working off of. Okay, this is the one we've been working off of. Again, 65.74 was our target for a long, long time. Wanted to see what it did when it got there. Okay, it got there, and now it's clearly above it. I thought we would see some kind of a sell-off here, some kind of a pullback. You can see, again, tricked a little bit by the September to December contract roll, but it did hit it on the December contract. Wasn't paying close enough attention to that, but the key is it did hit it on the December contract 3 times. Okay, and it stopped, and then it blew through, didn't come back and quite retest it here, but now it's just marching higher. Okay, does it look like that 1998, right, with lower interest rates and a market getting ready to explode? It's possible, right? Let's take a look at this NASDAQ. It's going to look the same. It's ripping, right? You can see, it's basically on highs. It almost came back and tested the white dashed line. Not quite. Okay, but you can see that little purple box there where it almost came back and tested it. But you can also see the December contract hit it back in here, okay, where those purple boxes are at. You can see it came up and hit it, or almost hit it, back here in late July. It did hit it in mid-August, okay, and then it came back up here and hesitated for a little while in, the beginning of the first week or so of September. And then it's just taking off, all right? Now, let's take a look at this, the Dow. The Dow hadn't been participating, right? It had topped out. 1, 2... get the sell-off back into here in Liberation Day, and then this rally goes back up to the highs, can't break through, and now finally it is starting to break through. Okay, so the Dow is breaking through. All right, and let's take a look at this one. We introduced this one the other day. Where is that thing? Okay, here's the Russell. This thing doesn't seem to be coming along quite yet. All right. Wait, hopefully I can get to a good one. There we go. Okay, so you can see it just barely starting to break out. The Russell's 2,000 of the smallest stocks in the U.S. Okay, so again, we have the Dow 30 of the biggest stocks. We have the S&P 500. 500 gives us a big, broad picture. We have the NASDAQ 100 tech-based stocks, mostly tech-based, and then we have the Russell 2000, the smallest 2,000, smaller 2,000 stocks in the U.S. put into this index called the Russell 2000. So we've got all the different markets covered, right? We've got a good perspective by adding this Russell 2000 now. We can look at this, and you can see it's just starting to break onto new highs. So if this thing starts to go, that's really a broadening out of the market. What we would potentially like to see is maybe the Mag 7 come off boil a little bit and let the Russell rally. So if we go back to 1998 and we see that market blow off, it was a lot centered around NASDAQ, right? In this the .com, anything .com, it's like, bam, off to the races. If this thing can broaden out and be a little more stable, and the Russell tends to participate, then this is that manufacturing, like we talked about in that data, the manufacturing coming back to the U.S., right? The base of this country building up from the ground up, Can we do it like this? I don't know. But look, there's some smart guys in there. We have to hope so. The two-edged sword is the technocracy on one side. The other side is trying to build the country up from the ground up with technology, okay? There's almost no way around the technology component at this point. So the key is it for good or is it for evil? That's what we always seem to come back to. Is it for good? Is it for evil? That's really what it boils down to. All right. And, okay, so I think we're good on the charts. I don't think I wanted to cover anything else there. All right, so let's bang through a couple things. We got a few more things to get through on our topics. And I'll take a quick peek in here, see if there's anything. Geo Rich, thanks, Craig. Filippo. Going back a bit, Alex Jones was saying that the bullet that got stuck in the neck was total BS as well. He was not pushing it. He was pushing against the propaganda BS line. Thank you. Great show. Yeah, well, that's probably true. I watched him backtrack yesterday. It was sort of painful to watch Alex Jones backtrack on that. I was watching Tom Renz. I think Alex Jones, he knows a lot, right? I mean, the guy is a walking, the stuff he pulls out of his mind is just amazing, right? His history, his and his ability to go back into 400 years ago, or it's incredible to watch, right? That being said, you got to wonder if he isn't. I don't want to get off on this too much. I mean, basically the breaking up of him and Owen Schroyer raises a couple red flags in there. And watching him backtrack yesterday, I think he backtracked because he's got his sources. His sources told him stuff. He bought into it. TPUSA told him certain things, and the coroner apparently talked to the surgeon or whatever who looked at it. He told him certain things, and Kyle Serafin's been telling him certain things, so he's kind of buying into this. But I mean, like the logic is, I really think. I mean, if you've ever seen what a 30-06 or a 308 or even a Win Mag or a 3.3, a Lapua. I mean, all these high-powered long-distance rifles. I mean, they don't. It just doesn't work like that, right? Those things don't bounce off cervix, cartilage style vertebrae. I guess anything can happen, and internal ballistics, anyway. Tom Renz brought him back to rationale. I think Alex Jones quickly tried to cover his tracks on that. And, but again, the guy's he's a brilliant mind, right? And I don't mean to shoot him down. We just need to we got to question even everyone. I think it's healthy, right? To question these people sometimes, even people we don't like, it's good to question both sides. I just think it's healthy. Anyway, okay. So keeping moving here. Yeah, this is what I want to get into. So let's keep rolling with this. All right. China export surge causing alarm. So this is what we've been talking about, right? This is pretty interesting. So China is now flooding the world with their cheap exports, okay? I think we've been hammering this pretty good, all right? Even though exports to the U.S. are down 20% because of all these tariffs. How have we done that, right? We put pressure on China by using external countries like Philippines or Vietnam or Korea or Japan or Indonesia potentially, right? Maybe even a little bit India, right? That's what we're trying to do now is create pressure on China. Okay, why is that? Because they dump goods on everybody, right? Now, while the U.S. talks, so while all this is going, let me just throw this out there, right? China and the U.S. have talks on some huge Boeing aircraft orders, all right? So just kind of, that it sort of fits and it sort of doesn't, right? But here's the real takeaway. India, Brazil, South Africa, large recipients of these cheap exports that China's dumping, okay? They're their brick buddies, okay? Brazil, Russia, India, China, South Africa. They're their buddies, all right? The Trump administration has taken away a lot of the other channels to dump these goods, right? This is when they partnered up originally, right? A lot of these deals they were structuring with these tariffs were to, I think, in a lot of ways, isolate China, right? Put them out on an island. We kept talking about that. Now we're seeing it happen, right? China's desperate. They're dumping the stuff on their buddies. Okay, their buddies aren't real happy. So at some point, their buddies, Brazil, Russia, India, China, South Africa, are going to say, well, not China. China is China. But the point is, they're going to say, look, we don't want these cheap goods either. You're destroying our markets. So in a sense, President Trump's transferring this out of the U.S. to these other people and saying, you deal with it. You deal with it for a while. You're buddies with these guys, right? You deal with them dumping the cheap goods. See how you like it, So that's what I think is kind of going on here. So the question is, how long can these other countries take this and withstand the flood of these goods out of China? Okay. So now, so a lot of people are saying, this is the agility and the durability out of China. Okay. And President Trump has been ahead on this and using these other countries to put pressure on China. Scott Bessent has said, China needs to look inside, okay, and develop their own internal engine. Okay. And they're struggling with this, right? They've done a couple stimulus packages and they haven't worked, right? If they do one of these again, it's going to look really bad for their leadership, okay? And it's very desperate. I think China's getting into a desperate spot. Why is this good for the world, good for the U.S., is that we're breaking them down potentially, okay? And they're going to be forced in some way or another to come to the table and create a better deal this time. Not like in Trump 1.0, where we create these deals and then they live up to nothing, okay? A lot of that was due to COVID and, a weak following administration that didn't follow up on any of the trade agreements. But the point is, the takeaway is that Trump's tactics here seem to be working. Now let's see if the overall strategy does grind down China, okay, to the point that they're ready to play fair on a global trade stage. So let them destroy their buddies for a little while. Let their buddies say, yeah, we don't like this either. And then what do? They're all willing to come to the table, and India is part of that. Now, let me hit this one here where Rubio, so India, okay, we had this H1, B visa news, and India kind of freaked out over this. So again, President Trump got their attention. And, we talked about this yesterday. I don't want to go into this too much, right? But Rubio is saying that India is of critical importance to the U.S. Okay, so again, it's good guy, bad guy, right? Trump and his, whoever's putting out this mandate is saying, yeah, we're going to slap you guys, India, with $100,000 H-1B visas. And Rubio saying, hey, we need India. It's critical to the importance and the growth of the U.S. Okay, now there's also 50% sanctions on India if they take in Russian oil. So you can see we're trying to break this thing down and fight these battles on many fronts, okay? And if we don't shut off the oil that India is taking from Russia and we don't shut off the oil that China is taking from Russia, it's going to be really hard to shut down China and get them to come to the table, right? But at the same time, we don't want to weaken Russia too much or else NATO is going to go in there and try to steamroll them. So it's a very touchy situation. And I mean, you could spend hours on this, right? And people do. So I think the real takeaway here is Rubio playing good guy, Trump playing bad guy, trying to get India to come to the table. Remember, India was first to the table in the tariff negotiations, and now they're one of the last at the table in the tariff negotiations. So I think they knew this. They were going to try to get away with one, right? And President Trump didn't let them get away with one, okay? And that's what we have to hope, right, is that President Trump is working on behalf of, global growth, global good, right? And the technology is just part of the process, and it doesn't turning into a technocracy, right? That's the great hope, okay? All right, and then let me hit these two. So we've got, this is what we don't want to take our eyes off of, right? The Baltic leaders are saying that Russia is testing NATO readiness, okay? So they sent these fighter jets into Baltic airspaces, okay, Estonia. And so the headline is that Putin is playing with fire, right? And so these incursions into Estonia, right, it involved two MiG-31 fighter jets that were combat ready. So they were loaded up. Apparently they saw missiles. And again, we don't know, right? Like, again, this is the news. Now, a lot of this I double check with the RT, which is the Russian Times, so I can sort of like say, okay, this is what this side's saying, and that's what this side's saying. And so where's the overlap? Where do these two things overlap? So we can actually try to arrive at some level of truth. But here's what I think is going on. I can't be 100% sure, but this is what I think is going on. So now enter Poland, okay? Poland has been dealing with these drones coming over Belarus, coming into Polish airspace and Poland. And now you get this guy, Donald Tusk, total fraud, right? In my opinion, didn't win the election. Basically appointed out of Brussels, out of the EU. He spent 6 or 7 years there. All right, now he's back, as a prime minister of Poland. And he's saying, hey, look, we're going to shoot down any objects that come through here, right, that violate our airspace. So that's not good. This has false flag stuff written all over it, right? So this is exactly who and where we would expect to see an escalatory response, okay, is with Tusk and with Poland, right? Poland is a major battleground here, right? If your planes get shot down in our territory, he says, Tusk is saying, don't come here and whine about it. So this is definitely picking up, all right? This is what's potentially triggering this, Article 4 with Estonia meeting at this United Nations Assembly, right? It just kicked up this week, right? How funny that is, right? This UN Assembly just picked up in September. It'll go through December. And right out of the gate, right, we've got this issue with Estonia. False flag material all over the place, okay? And that's what we're watching for. So here's another one that I want to throw in there. I don't know if these are connected or not, but there's drone sightings over an airport in Oslo, okay, Norway. All right. let me put this up while I'm going through it just so you can see this. All right. And so, okay. So here's the deal, right? The Oslo police arrested 2 nationals from Singapore, okay, accused of flying their drones over the Akershus fortress. Okay, so this is this medieval castle, but the key is that the government uses this for events. Okay, so it was unclear if this was connected to the airport disruption. All right, this comes just days after major European airports faced electronic check-in and boarding outages. Okay, so again, London's Heathrow was hit. Berlin and Brussels airports were hit, 73 flights being canceled. Okay, and they're linking this back to cyber attacks, right? So again, this Poland air. So what do we have here? We have this Poland airspace issue, right? We have this issue with Estonia, right? The drones in the Norwegian airspace, cyber attacks across European airports. It just feels so ripe to me for false flags, okay, for a kickoff of war. So again, much as I love the things that Charlie Kirk did, said, and was doing, we can't take our eye off the ball, which is potential World War III and some false flag event that rolls in a lot of bad things for mankind. Okay. All right. So with that in mind, we also have, a couple quick things here. Let me see if I can blow through a couple of these, make sure. Okay. We hit those. Pentagon. Okay, here we go. Pentagon tightens the media rules. I think this also ties in. A couple weeks ago, we saw them change it from the Department of Defense to the Department of War. Okay, and then now we see the Pentagon tightening up media disclosure rules. All right, and I think I've got a quick one on this. All right, let's go to that. Okay, so here we have, right, journalists will only be allowed to access the Pentagon premises if they sign agreements restricting their movement in the building, stipulating that they will not obtain and do not possess unapproved materials, according to the document cited by the news outlets, right? The DOW, Department of War, again, it used to be DOD, remains committed to transparency to promote accountability and public trust, okay? And then they say the National Press Club condemned the policy, calling it an unacceptable infringement to the independence of the press and dangerous precedent. So we can take this multiple ways, okay? We can say this is good, right? And Hegseth is cracking down and saying, look, we're not going to be pushed around by the media. We're not going to let the narrative be controlled. We're going to drive this, but, or you can say this is leading to war, right? We don't know. I don't know. Maybe you guys know. I mean, if you know, please put your thoughts in there, what you think is going on. I'm just trying to point out that I think false flag is it's all over the place, all over Europe, on that front between Russia, Ukraine, Europe. We know Europe's taken, President Trump's been behind this, 5% NATO out of Europe, spending 5% of your GDP goes into NATO. That's coming on over the next 3 to 5 years. That's only ramping up. We hear, Carlyle Group, right? Jeff Curry. Again, these guys have been behind a lot of this. These guys are the war machines behind the system. Okay. They invest in these defense contractors, right? They find these little budding defense contractors, pump money into them, drive them up, either get them sold off and somebody acquires them, or they get them making tons of money, right? Because they're on the inside. They know what's coming. They have the attorneys, they have the investors, they have the money, they have the connections, everything else. And they're saying, like Jeff Curry's saying, we're seeing a big shift. We're going to get a big capital flow shift into Europe in preparation for something, right? What is that something? War. We look at Anduril, right? We look at Palmer Luckey, it's telling us we got 2 or 3 years to get these drones, right? At Anduril, we got to get these drones ready to go. We also see him partnering up with Peter Thiel and putting together a bank. I think it's called Ibero or something like that. I always forget the name of this bank. It's the silliest name, but again, goes back to stable coins and, money and moving money for Silicon Valley Bank did, right? SVB. So this bank is going to essentially kind of replace SVB, what Sam Bankman-Fried was, the Silicon Valley Bank, not Sam Bankman-Fried. I get those SVB, but anyway, the Silicon Valley Bank, right, that blew up a couple years ago. So this is kind of and why would they move it from there to here? Because people on the West Coast are like, yeah, we don't want another Silicon Valley Bank here. In the Midwest, they're going to try to move this into Ohio. They're looking for approval right now. So again, lots of things beating for war drums, all right? And it's just very concerning to me. Try to not take our eye off that ball. And as investors, currency traders, debt market traders, stock traders, these are the things we're watching for. Because again, even though the stock market's up and it looks really good and we could see it bubble up, when it gets to a top, if it gets to a top, and if it ever comes down, and we ever, how harsh is it is the question, how harsh is the other side of this? Okay. If and when this, the beanstalk doesn't grow to the moon. All right. Okay. 2 more quick things. The Trump on the Tylenol thing, that's going to get covered all day. Of course, basically saying women during pregnancy should be stopped from taking this. There also talk about taking the mercury and the aluminum out of the jabs, right? Is the beginning of them really cleaning up cleaning up the health and making healthy moves for us on behalf of the American people. Of course, the other side of the media is already trashing it, saying the science isn't well founded. It's a bunch of huckster science and so forth. But there's no surprise there. Okay, and then the only other thing is we're watching in Hong Kong this typhoon. It's called Regasa, I think it is. I think it's the biggest one they've seen in maybe 9 or 10 years. So again, this could shut down some things in the Asian front. Probably not a big deal, but again, it could be. It could be significant from a the reason it could be significant is capital flows, right? If something devastating hits Hong Kong, the reinsurers, what is this is when we have a hurricane hit on our coast, the insurance companies take the hit, and then once they're done taking the hit, they have a ceiling on the hit that they have a ceiling, and then they go to what are called reinsurers, right, which are typically located in places like Switzerland, other places around the world. These reinsurers get engaged in this whole thing. And so that's the question. What if Hong Kong gets hit hard with this thing, and it is a devastating, very costly typhoon that comes through? Does this have implications on the big European Swiss reinsurers, and does that start to cascade into more problems with Switzerland, with Europe, and so forth? So again, just reaching for straws there a little bit. I don't want to make a bigger deal out of than what it is, but I wanted to kind of connect that this is a risk, right? And when people underestimate these things, usually they get bigger than what you think, right? And that's the Weather Channel's job, to underestimate big ones and overestimate little ones, right? So again, we don't know, but we're going to watch and see what this typhoon does. All right, I think that's everything I had. Boy, we seem to be going about this hour and 20 minutes. So that's probably what we needed before, was an extra 15 or 20 minutes. I'll try to cut this down. It's just there's so much content. I feel like we covered things pretty well today. You got a pretty good grip from a financial perspective. I don't think there's anything else that I needed to cover. Okay. All right, with that, everyone, have a blessed day. We'll catch you tomorrow. Energy Day. Got a couple things. President Trump's hitting these guys on these wind turbines. So it's going to be, this will be an interesting battle. We'll see if it heats up again today or not. But he's never afraid of a fight. All right. Have a blessed day, everyone. We'll see you tomorrow. Thank you.